Hello Piconomists, and welcome back to my channel. If you're finding me for the first time in this channel, we talk about personal finance, investing, and all things money. Now in this video, I want to go over an article I found on CNBC Finance. Again, a quick disclaimer here, this is not financial advice, and use the investment strategies presented here or in linked websites at your own risk. Now the article, which I have open on the screen here, talks about index investing, which I've also mentioned in my previous videos. The article is titled, Why Index Investing Makes Sense for Most People, and it was published just 2 days ago. Now I've preached about the S&P 500 index fund before, and much like other big name investors, sworn in its name. Now let's find out why index investing is ideal for most people. First, your local investment firm will always advertise themselves as having some kind of superior ability to pick individual stocks that will outperform the market. They then use this ability to justify high fees for their business. So it is very costly to invest in this way. Now, second, the average investor doesn't necessarily have the time and expertise to independently make the best investment decisions to compete at the elite level. It requires a lot of knowledge and understanding of the stock market to find the moneymakers, and even with years of experience, you might still not get it right. And in addition, you would have to continually invest your time in following the market and researching the stocks to discover the best bets. So therefore, index investing is an easy way for today's investors to take part in the market without the high expense of your time and money. Now, no one can really predict where the market is headed or how it will react to global events, political situations, and such, which all affect the stock market. But there are always active investment managers who get lucky and beat the market for a year or two. But if you look at their performance over a long period of time, they rarely manage to produce returns that beat the market on a consistent basis. Now, considering all this, a passive investment strategy, meaning investing in low-cost index funds, makes sense to most people. Now, the author of this article lists 3 main reasons why index investing is the best approach. And by the way, these are from the book called The Index Revolution. So let's scroll down a little bit to get the list. There we go. And by the way, I haven't read this book myself, so I have nothing to contribute about its content or quality. But anyway, here's what the reporter picked from the book. Number 1, the changing market has changed investing strategies. Here he is referring to how the stock market has changed in the last 50 years. So back in the day, New York Stock Exchange trading volume was 3 million per day, and most of the trading was done by individual investors. Now, the trading volume has grown to 5 billion, of which over 98% is institutional trading. And that's not all. Here's the most shocking bit of information to me. The 50 most active of these professionals do 50% of all the New York Stock Exchange trading and spend 100 million annually in fees and commissions, buying information services from the global securities industry. So we're talking really big numbers here. Imagine spending 100 million in fees and what kind of returns you would need to cover those costs. And then number 2, index investing outperforms active management. So there's a quote from the book, and it goes, "History's largest, most capable, best informed, and most highly competitive professional investors dominate today's stock market. So almost no one can expect to outperform the others regularly after costs and fees." Now, this means that you're better off tracking the market, in other words, doing what they're doing or investing in what they're investing in, rather than trying to beat the market. Basically, this way you can utilize expert investment strategies indirectly created for you by major investors. You don't have to independently make the investment decisions, just do what the others are doing. And finally, number 3, index investing requires less of your time. Well, most people have other things to do than actively keep up with the market and find the greatest investment opportunities. So trying to chase extraordinary results that beat the market will likely cause you to fail and do the exact opposite. It's a waste of time. So with the low-cost index investing, you can participate in the market without paying high fees and, more importantly, without losing your time. So saving for the future and building wealth doesn't have to be complicated, expensive, and all-consuming. Now, 50 years ago, it was realistic to expect that an experienced team of portfolio managers could outperform the market. But more recently, only few investment organizations yield better returns after fees and costs over the long term. So in short, those were some of the main reasons why you should do index investing instead of paying a high price for actively managed funds. I'll surely get back to these topics in future videos, but that's it for today. Thank you for watching, and I'll see you in the next video.